Nigeria's government is proposing a one-time windfall tax of 50% on banks' FX profits. Who wins and who loses if this law is passed? Good morning. It's another power-packed episode of Business Week on your favorite Pan-African news channel, Arise. In our review of the world this week, we take a look at the Microsoft outage that almost brought the world to a standstill, and a finance bill amendment to tax Nigerian bank profits rattles the stock markets, while the IMF expresses worry over Zambia's de-dollarisation plans, even as it downgrades Nigeria's growth outlook for 2024. And Nigeria's Postmaster General tells us how she plans to put her stamp on the postal service through technology. I'm here to help you catch up. As always, if you couldn't keep up, I'm Rola K. Akinkunmi-Filani. As always, we'll take a look at global energy commodities. First, starting with Brent. Not much to smile about there, actually, contrary to the look on my face this morning. Brent was down 2.23%, as was WTI, down by 2.46%. The big news there is worries over Chinese oil demand and actually signs that there may be a ceasefire on the horizon around the Gaza conflict. So that's something that obviously could ease up worries in oil markets. And we see the red sweep across the board, across natural gas and RBOB gasoline. So quite a bearish note for energy commodities at the end of trading. Let's take a look at equities markets, starting, of course, with Nigeria. Now, this high end to the week for the Nigeria Stock Exchange actually belies what was a pretty volatile week following the finance tax bill announcement from the government, and that did rattle banking stocks a bit. I'll talk about that a bit later in the show. But a fair good amount of deals still traded. 603.8 million shares traded on the stock exchange with a value of 9.16, and market capitalization on the stock market ending the week at 56.9 trillion. What is Africa telling us about its equities markets? Let's take a look. Starting with Joburg. Joburg was down by 51 basis points to end the week at 79,000.9 points. Ghana was up by 2.96%. The big mover there on the Ghana Stock Exchange was MTN Ghana, and the Ghana Commercial Bank closing the week in Accra at 4,320 points. Nairobi was down by 12 basis points, but Casablanca up just a bit by 20 basis points. Let's take a look at Wall Street. Another major bloodbath on Wall Street. So a lot of investors are moving out of the big global tech stocks. Of course, signs that the Fed may be easing off on interest rates later in the year is also helping some of the smaller and mid-cap tech companies. But you see this route there, 1.07 Dow Industrial Index. S&P is also down 78 basis points. NASDAQ was down by 0.91%. Of course, that was also driven by the global outage on Microsoft Windows operating systems around the world. And again, I'll be talking about that much later in the show. Let's take a look at my top picks from the week. Right, the first item on the top picks, as I mentioned, was a global outage. Now, this wasn't a cybersecurity attack, contrary to some reports floating around. This was as a result of CrowdStrike, one of the major cybersecurity companies around the world, trying to do an update on its cyber threats detection software on Microsoft systems. Now, CrowdStrike has 20,000 customers around the world, including Amazon and Microsoft. And during that update, there was a problem which forced outages across computers around the world. Aviation was affected, businesses were affected, media was affected, e-commerce was affected. We heard that over 4,000 flights were grounded around the world. Now, I think things returned to normal, but this just highlights just how much interconnectivity there is in global computing systems and the degree of vulnerability of these tech operating systems. Now, CrowdStrike is about $83 billion worth as a tech company, but I think there are concerns around why just a few cybersecurity companies hold sway in global markets and what vulnerabilities there might be for world computer operating systems. We'll keep an eye on that on Arise. Of course, Nigeria proposing a 50% windfall, a one-time windfall tax on banks' FX profits. Now, this amendment bill was sort of tabled and introduced in the past week. It's going to be a lengthy ride through the Nigerian legislature to eventually get it passed into the law. But the government is thinking this is a 50% tax on realized gains, profits that banks made from FX revaluation in 2023. Of course, banking stocks took a major hit. On Thursday, banking stocks were down by over 2%, even though the NGX ended the week on a relatively positive note. What we're keeping a very close eye on, that is really, really big news in Nigeria now. BlackRock. Assets under management for BlackRock, the world's biggest and well-known asset manager, assets hit 10.6 trillion, up from the 9.3 trillion we saw the previous year. This is big news because in the second quarter of this year alone, BlackRock saw inflows of about 81 billion into its fund. It's driven by its exchange-traded funds, which are the most popular means and vehicles with that asset manager for investment. BlackRock is also making acquisitions. It recently put in a bid of 3.2 billion for Preqin, a data company. And of course, you know, several months ago, it made a $12.3 billion bid for global infrastructure partners to invest more in that asset class. So good news there for BlackRock, good news for investors seeking high yield investments in assets around the world. The EU says Elon Musk's X is in violation of its Digital Services Act, especially around the X blue tick verification function, which it says is not transparent and not allowing users to really verify the handles on X. Now, Elon Musk on Twitter have not really made a formal response to this, but we're likely to see a bit of a standoff there between the EU as a regulator under its Digital Services Act and X, which has been an eye on the storm over consumer practices in recent times. And finally, the IMF is advising caution to Zambia over the government's planned de-dollarisation. Of course, Zambia has a $1.7 billion program with the IMF. Will be probably seeking some more money from the IMF. It's recently undergone a debt restructuring program. The IMF says, wait until we see a bit of economic stability in the exchange rate, stability in inflation levels before we move to de-dollarisation. So the IMF not really supporting that bid by the Zambian government. And the Zambian government has said businesses that fail to comply, i.e. stop putting prices for goods and services in dollars, will face a 10-year jail sentence. Quite a steep penalty there for businesses. Again, we'll be keeping an eye on that one in the coming weeks. That's it for my top picks for the week. And now for some other top stories from around the world. We'll start with China. China's economy grew 4.7% in the second quarter of this year compared to a year earlier, which fueled demands for more robust stimulus when leaders of the Communist Party met in Beijing for their much-awaited third plenary. The GDP estimate was released by China's Statistics Bureau on Monday. It was less than the 5.1% average projection by 30 analysts in a Nikkei survey, and it did not meet the 5.3% growth in the January to March quarter. That's Q1. Now, the chair of the Federal Reserve, Jerome Powell, pushed back against the notion that a rate decrease in September may be viewed as a political move ahead of the fall presidential election in the US, saying on Wednesday that the Fed will decide interest rates when and as they are needed. The speech was given at a challenging moment for Wall Street. Treasury yields have risen to multi-year highs amid recent market volatility as investors assess the possibility of longer-term increases in Fed rates. Before Powell's speech, traders were pricing in a 96% likelihood that the central bank will maintain rates in the current range of 5.25% to 5.5%, according to the CME Group's Fed Watch tool. Back in Africa now, during the 2022-2023 planting season, Ghana's Cocoa Marketing Board, Cocoa Board, reported a profit of 2.3 billion cedi. That's about $150 million. The planting season's profit, according to figures from Ghana's Auditor General, signals the end of a 6-year losing run. The restructuring of cocoa bills of around 7.9 billion Ghana cedis in 2023 was the reason for the profit. The state-owned freight and logistics business Transnet in South Africa has been granted a $1 billion 25-year loan by the AFDB to aid in its recovery and expansion, with a particular emphasis on the rail and port industries. AFDB's board of directors approved this strategic investment on the 12th of July with full backing from the South African government, as stated in a statement posted on the AFDB website on Thursday. According to the announcement, the loan will be used to fund the first part of Transnet's extensive 5-year capital investment plan worth $8.1 billion, which intends to improve the company's current capacity and set it up for future growth in important transport value chain areas. The International Monetary Fund, IMF, has lowered its forecast for Nigeria's growth in 2024 to 3.1% on Tuesday, citing the country's weaker than expected Q1 growth. The revised estimate was included in the IMF's July World Economic Outlook, which was made public on Thursday. The reduction in prediction is equivalent to 0.2 percentage points less than the previous estimate of 3.3%. Nigeria's lower than expected GDP and growth in Q1 led to the downgrading, according to the IMF. Still on Nigeria, inflation figures for Nigeria came to a record 28-year high of 34.19% in June for the 19th consecutive month, up from 33.95% in May. In addition, during the week, Nigeria's President Bola Ahmed Tinubu approved a 70,000 naira minimum wage for Nigerian workers to be reviewed in 3 years. Still on Nigeria, the Dangote refinery is scheduled to go public on the Nigeria exchange by March next year, that's 2025, according to Aliko Dangote, the company's president and CEO. The statement comes after another one about the supply of premium motor spirit or fuel, which was originally supposed to arrive in July, but has now been rescheduled for August. Dangote stated in a press briefing that the refinery was ready to start selling gasoline in August this year, after working with the government and the Nigerian National Petroleum Company Limited to address its problems with the supply of crude oil. Still on Nigeria, the Senate has approved the second reading of a bill for the amendment of the 2024 Appropriation Act as the president seeks an additional 6.2 trillion naira funding for the budget. In a letter read by the Senate President Godswill Akpabio, the president explained that the Appropriation Act Amendment Bill 2024 aims to allocate 3.2 trillion naira for infrastructure projects and 3 trillion naira for recurrent expenditure. The president also seeks to amend the Finance Act of 2023 to impose a one-time windfall tax on foreign exchange gains realized by banks in 2023, adding that the tax will fund capital infrastructure, education, health, and other public welfare initiatives. Well, that's it for our top stories.